It might not feel like it, but you've got to trust me on this because the statistics say it's true. We're out of recession. And who knew? Third quarter growth at 2.2% versus what we thought was a contraction in the first two quarters. But it turns out statisticians can adjust numbers. And so the second quarter recession has magically disappeared, which means that we didn't have a recession at all. That's kind of confusing, isn't it? Dr. Adrian Saville, Chief Executive at Cannon Asset Managers, on the line to us this evening. So there was no recession this year, Adrian?
Evening, Bruce. So the numbers are better than we had expected, and they were also, we shouldn't have felt as bad as we did.
I wonder what drives sentiment, reality or the numbers. We see the numbers that tell us we're in recession, so we feel bad, so we go into recession. Which does the tail wag the dog or the dog wag its tail?
Yeah, so, this is, I guess, the three levels of truth: lies, damned lies, and statistics. And there's a powerful statistical machine behind this that represents part of South Africa's reporting and regulatory capability, which really is world-class. And it's not uncommon for statistical agencies and reserve banks to revise and adjust numbers. After the fact, stronger data or more holistic data emerges, and that's used to adjust numbers. And in this case, GDP for the second quarter wasn't minus 0.7, it was minus 0.4. I think that really is we could put that as a rounding error, but it's better than minus 0.7.
Sure. I mean, overall, though, what has changed? What improved in the third quarter versus the dire, dark days of quarter 1 and 2?
There was, at the headline level, 2.2% growth, which was in itself much better than the second quarter, that minus 0.4. So there's a 2.5% swing through the quarters in economic growth. And that the 2.2 that was reported not only was much better than Q2, it was also well ahead of consensus. And the things that lifted it, manufacturing, which is a large but not the largest sector, gave 7.5% growth. Transport kicked in. Agriculture made a contribution, especially in the crop sector, grain sector. And finance, although it was a swing factor, just 2.3 economic growth, because finance, banking, that services cluster is the biggest sector, even though the growth was moderately better than the whole economy, the weight of the sector helped make a positive contribution. Mining was the dark sector.
I mean, it's nice to have a little bit of growth coming through. That's great, but it's not going to make the slightest bit of difference, really, to ordinary people's lives in South Africa. Certainly not this year. But is it the beginning of a building block towards 3.5%? We keep hoping for it by 2020, 2021, 22, 23.
Then,
one day.
At the start of this conversation, you pointed to sentiment versus reality, or if you deliver economic growth that is better than anticipated and a material reversal on the previous quarter, that starts to feed confidence, and ideally investor confidence rather than consumer confidence. That confidence starts to feed further investment and animal spirits, which starts to lead to a flywheel effect. And you then see this in capital markets, stronger share prices. Certainly the bond market was happier today for a little while. The rand was stronger for a period. And I think you will see this stronger third quarter economy translate into better budget figures when the budget is announced in February of next year. So there's a silver lining.
Okay, let me just add extra cloud to your silver lining. Let me just block out the sun completely.
I thought I was doing well there.
You were doing very well, but what you're not including here is Eskom. And dear Eskom, which 2 weeks ago was telling parliaments, I think it was telling the Parliamentary Standing Committee that there'd be no more load shedding. Suddenly they've implemented load shedding because guess what? All of the infrastructure is old and falling apart and needs to be fixed.
I think that's a fair point and a big issue, Bruce. In the manufacturing sector, one of the big components contributing to that 7.5% economic growth is the automotive sector. Domestic vehicle sales are in the doldrums. So this is export sales. No electricity or electricity uncertainty means fewer export sales in the manufacturing sector. And the mining sector, which is a big employer and really the backbone of the economy, even though it's a very small sector, it really is the backbone of the economy still, is heavily reliant on electricity. So the uncertainty that is brought into the picture by this load shedding, I guess, does thin the silver lining that I was trying to paint on that cloud.
My thanks to Dr. Adrian Saville, Chief Executive at Cannon Asset Managers.